Hey everybody, it's Thursday, November 13th, 2025, and today was unfortunately another brutal day out there. One of the worst days of selling for crypto and for tech stocks since the 10th of October. Really everything in the market, almost everything, was selling off today. And for today's video, I'm going to switch things up a little bit because we are at a key inflection point. So Bitcoin is at its last line of support. The S&P 500 and NASDAQ are about to flip structure into a downtrend potentially. So with each of the charts we go through today, I want to look at key support levels and key resistance levels so you all can make a plan for your trading. And as for the other charts outside of the main assets, instead of going through the normal list of charts today, I put out a request on my Discord saying, hey guys, what are the assets you're in that you really want me to analyze the charts for these support and resistance levels? Because honestly, I couldn't do this without everybody in Patreon. So thank you so much for your support. And they are my number one priority, but they're assets that I'm sure a lot of you guys are into. So for each of those, we're going to say, okay, what's the support down below? If that fails, you can be ready to take action Y to get out of the trade, to hedge, to, potentially enter a short. And if the resistance overhead breaks to the upside, then you can add to your position. You can get long with more confidence again. So hopefully that will help you plan and come out better on the other side of this. I know it has been a challenging few weeks in markets, but just like the beginning of this year into April with tariffs, just like the yen carry trade low, this too will pass. And maybe it is going to be a longer drawn out correction, but hopefully you can recognize that early if that is the case. And I'm not saying that is the case yet, but if it is, hopefully you can recognize that early, get on the right side of the market, on the right side of the trade, because there's always an opportunity out there and there's money to be made even in a bear market. So let's get right into it. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting here on the S&P 500, and you can see that selling that stepped into the market today. We did not hold this 6,800 level. We dropped down to 6,750, but at least we did bounce there. And this marks our previous all-time highs from the 22nd of September. Then we held above that range from the 1st of October all the way until that October 10th breakdown. So bouncing from this point is as good a sign as we could have had today. And it also aligns with the VRVP point of control, the most traded zone in this all-time high territory that we have been in the NASDAQ. Now, we still have a higher low, but we don't have a higher high yet either. The line in the sand to continue this uptrend would be breaking above that October 28th high that we made on the S&P 500, and we have not done that yet. And then a break below this pivot low from the 7th of November would put us in a confirmed daily downtrend. We can connect a trend line through these low points right here, and we could treat this as a point of support. So we'll just keep this up on the chart. If we do drop further, that's where we would want to see a bounce. You could make an argument this right shoulder is a little bit high, but you could make an argument that there is a head and shoulders pattern in play if that forms, and then we can map out our targets to the downside. But let's not get ahead of ourselves there. We'll just keep the trend line there for now. And as long as this support is holding, that's good for me. We have bottomed out on the 4-hour RSI. Mean reversion could drop a little bit more, but we could print a mean reversion dot any moment here, and we're getting a little overnight bounce. So that's a decent sign. Now, if we do correct more, and if we go out to the daily, the pink line, which you've probably heard me talk about ad nauseum, is the 20 weekly moving average for the S&P 500. We have not touched that since breaking above it and back testing it in May of this year. And normally that's where the street steps in for buying. So in past uptrends, you can see how we find a lot of support there. We did wick below it here in August of 24. That was the yen carry trade low. So that was a very extreme event. But generally speaking, we do bounce off of that unless we are seeing a more extreme correction, and we bounced off of it here in August of 23. Now, the end of 23, September through October, I can't even remember the news events anymore, but that definitely saw a rejection below. But most of the time, I would say when we are still in a bull run, we are finding support there. And when we were in the 22 bear market, we were finding actually a lot of resistance there at the 20 weekly. So something to keep your eyes on. And the last thing I want to point out, you probably saw this faint line behind my S&P 500 chart. That's going to live there for a bit because I want to keep an eye on it. It is an overlay day for day from Trump's 1.0 term. So I'm starting this here from the November 4th election day of this year, mapped out to election day 2017, and it overlays the path of the S&P 500. Now, the move up was more extreme into February, and the initial tariff correction, because there was also talk of tariffs that caused the market to correct, was not as extreme as our tariff correction at the beginning of this year. But we are moving into a period where there was a secondary correction, and it was more extreme in 2018 into 2019. Now, 2025 into 2026, I suspect if we do see something, and I've been anticipating something in Q1, but this suggests it could come sooner, that it would not be as sharp or as deep because we already had that deep correction earlier on. So it's something to watch out for. And if we are looking to historical overlays, and we've brought up these charts in the past where we confirm or we look at post-election year performance where we had similar runs up with the summer into August outperforming. And a lot of those following years saw a lot of chop for the first 4 months of the year. So we could imagine that Q1, regardless of how this goes, could just chop around. And then sometime in April, then we could start that trajectory up. And it's still a positive trajectory for the year. But then the last 2 months of the year, which I'm not there yet, the last 2 months of the year proved to be more challenging. So this isn't drawn to scale. It's not totally accurate, but I would say we could anticipate a decent amount of chop, good performance, and a decent amount of chop the last 2 months of the year if we're just comparing those historical overlays. So we'll take this day by day. I don't base all of my trading off of these. Some people don't look at fractals or historical patterns at all, but I think it is something interesting to keep tabs on, particularly with how similar a lot of these peaks and troughs have been. It's amazing how the seasonality maps out year to year. I mean, even, this peak here and this trough, even though this was much higher, they just fall at these very similar points. And this peak actually aligned with the drop in tariffs. So there's some inverse correlation, but it's really interesting. All these random players and inputs and things change year on year, but somehow some kind of repeating pattern and order plays out in markets. We talk about this a lot with TA and levels, but even price action repeats because human psychology doesn't change and people react similarly, and fear and greed and these kinds of patterns play out time and time again. So anyway, something interesting to watch there. Okay, if we look at the NASDAQ, just really a similar pattern here, but slightly weaker than the S&P 500. It dropped one support lower and has a bit more recovery to do. Tech has been underperforming the S&P 500, so we've seen that play out for the last couple of days, and we just need to keep an eye on this for when it could recover. If we do extend this trend line out, one argument you could make for this being a local low, this was our downtrend that we broke out through. Now, this could be a back test for support. It's a short time frame downtrend. Really, for trend lines, I like to look at things that form over several weeks, and this really just formed over a few days. But it's still something to pay attention to, and we also have a lot of volume support here on the VRVP right at 25,000 where we bounced today. Now, if we are looking overhead for resistance, we have to imagine, because I said we were going to look at support and resistance, that this cluster right here where the VRVP is spiking at 25,250 to 25,400, let's say that range right there, is going to provide a bit of resistance, and then it will be smoother sailing up to 25,900. Okay, if we're starting here on Bitcoin, we almost tagged our trend line here that has been supporting the price action since August of 24. So we've had 1, 2, 3, 4. This would be our 5th touch point. So if we do come into this trend line, we would want to see a strong reaction with volume follow through to confirm that as a point that we might be bouncing. And if we look to the left, where we did find support today at that 98,000 is about in line with this low from the 22nd of June, 2025. And it's the middle of these all-time highs from December to January. Not all-time highs, but at the time that we were breaking into fresh highs. So it makes sense where we are finding support right now. And in terms of overhead resistance, we still have this downtrending line right here that is playing our overhead resistance. So we have some clear levels to watch out for. If we are just looking at RSI on the 4-hour and mean reversion, we could drop a little bit more. So we haven't hit an extreme. We hit an extreme on that low on the 4th of November. And you could make an argument that we are forming a bit of a bullish divergence there on the RSI. But the other thing I just want to look at is our confluence model clouds to see where we are in those. And if we're just assessing these for the narrative, we know that we normally take 2 or 3 swings in the lower band and then go through the center band to the upper band. So here in this last correction, in the early part of the year, we took 3 swings. And then on this move up, we had our 3 swings. And this was a bit of deviation here. But you could argue that we have swing 1 here and then swing 2. And now we're coming down for swing 3, potentially tagging that trend line and then saying, okay, can we break back into the center band and get more of a recovery going? The key resistance levels overhead now are really that 106,000. There is a point around 104 and change where we've been finding a lot of resistance. So let's see if that does anything for us. But I would say, yeah, that 104.7 to 106 is going to be that first area of resistance. And then the lines we've been talking about at 108, 107 to 108. And then overhead beyond that, 110 to 111. So those are the main zones to look out for. And let's just draw that line in because I didn't have it on my chart for the 108,000. So that's coming in right about there. There we go. And really this 110 to 111,000, this, I think, if we get back in the center band, is going to be our biggest challenge overhead because the 200-day moving average is now going to be in play somewhere around there if price does bounce back up. So getting above that zone, assuming we do find support, that is going to be the first time where I would have some confidence that, okay, this downtrend is broken, we've gotten above the moving average, and we have a shot at recovering. If we broke below this trend line, then I would have to get more defensive. Okay, let's look at Solana. And for Solana, since we already broke our downtrend line, I want to look at where we could logically expect some kind of support to step into the market. And Slapic actually shared a couple charts on our Discord, sharing some thoughts with levels he saw around current prices around 141 and then again at $126. And I was looking at this on the weekly, and I didn't chart things the same way he did, but I found some confluence there. So it's always cool to see a couple different methods of TA play out. So if we're looking at the weekly here, you know, we took a couple of swings in the confluence model upper band. We got back into the center, and a few weeks ago, it looked like we were extending the uptrend, but we broke down. So 205 is a key overhead resistance. And now we have to imagine we're going to come back in and bounce off that confluence model lower band now on the weekly, which is sitting right around, depending on when we intersect this, right around 126 to $127, which aligns with his $126 target. Now, the other thing I want to look at, because we broke this 7-month uptrend, is saying, okay, do we have another trend line potentially from the bear market bottom coming through here? And let me just sharpen that up a little bit. Great. All right. And if we marry that up to the pivot low here from the 7th of April, that is coming in also right around that 126 to 127, and more importantly, is coming in line with the Confluence model center band that is traveling up right there. So I would say between 126 to, I would say 131 would be the area that I would anticipate support. And the reason I say 131 is because we have all these weekly candle closes right there. You could go down to the wick, which would be sitting at that 126, but that gives us that range of this wick low, which also is confluent with that 126, and this weekly candle close section right here. And you can see we really didn't close that many weekly candles underneath that, but really found support at this pivot point from June of this year. So this is going to be a very important zone, and Solana would be in a lot of trouble breaking below that, but at least we can anticipate some kind of bounce coming in there. Now, if we are looking to the other side of the market for overhead resistance, we now have to assume, unfortunately, that, let's see, that this area here, we had all these daily candle closes at 155 where we really weren't wicking below that. And there's this previous pivot point low here on the 3rd of August that's also coming in at that 155 number. I fear that that might now give us a little bit of a headache. And so even if we see a rally tomorrow, I'm wondering if we are going to correct into that. It is something to watch out for. There is still a bit, I don't have time to get into it today, but a bit of time analysis. So we looked at Bitcoin corrections that are pointing to, if we get a low, it should have come in between Monday of this week and Saturday. In Solana uptrends, we, you know what, I'll just get into it. Why not? Everybody's wondering what's going on. So uptrends and swings in Solana generally move in these 30, 60, 90-day cycles. And you can measure these smaller uptrends and these larger ones. And so just to get into it really quickly. So this uptrend here from the bottom to the top was 45 bars. So even though the cycles are 30, 60, 90 days, those in-between points at 45 bars are also important. So for a balanced correction, you would assume at least 2 weeks, 1/3 of that 6-week run-up would get you a balanced correction. And if it extends beyond that, then you expect half the time, so 3 weeks. And beyond that, you would expect 2/3 of the time, 4 weeks. And so this was, it seemed like a garden variety correction at first. And if you look back at my YouTube videos at the time, I said, we should anticipate 2 weeks to the bottom. And 14 bars in right here, we hit the bottom. And on the 4-hour chart, it looked like the bottom. We started rallying up. Then the Israel-Iran thing happened, and we corrected again. Now, what's impressive is this next low on that next pivot point low, where does that land? It lands exactly at 21 bars, so at 3 weeks. And then the US gets involved, and the ultimate low comes in exactly at 30 bars at 3 weeks. 4 weeks, I can count. Now, if we look at that next run up, the next run up was exactly 30 days. And what do you think the correction was? The correction was a balanced 10 days down before we started the next run up. So then the question becomes, is what was this ultimate run up here over that 7-month period? It was 164 bars. So if we take roughly 1/3 of that, that would be at 55 days. And where are we sitting right now? We are at 55 days. Today is day 56. So we are right within that window, and Bitcoin's window extends to Saturday. So, you know, the longer these time frames, you can give it a bit more tolerance, but we do have some time analysis on our side saying this could potentially be the bottom. Now, if that ends up not being the case, then we have to go to, 82 days as half of that time, and we could then map that. I think that puts it around like December 10th or something like that. Okay, we spent a bit more time on all of those than I thought, but hopefully that was helpful and you guys could learn something from it. So first request from the community is from Sailing Tortoise, and I want to look at PANW. Looks like it's forming, what'd they say? Head and shoulders pattern. Should I get out now slightly and take profits or wait? So let's pull up PANW and see where the support is coming in and what to expect. So it looks like it's been in a decent run for the year, a lot of chop. But the first thing I notice is it seems like a very clear zone that you broke out from, that you're back testing for support right now. So that's something to watch. Let's go on the weekly first to see how the weekly is looking. Oh man, this has been in an uptrend for a very long time, since January of 23, and really almost had a blow-off style top here before that February 24 correction. I wonder what happened there. Oh, it's earnings related. That looks brutal. And then April of this year. Okay, sorry, just getting a feel for it. But if we do draw a line across the top and look where these weekly candles closed, that's exactly where we are right now at 204. And $200 is also a psychological level. So I haven't charted this before. So I'm just kind of going through it with you live and thinking through this. We do have earnings coming up on the 19th of November, so next week. So that could be an inflection point. And it looks like they've had positive earnings for a long time, but maybe expectations are high. It's going to be hard to tell. But let's bring up RSI and mean reversion. We do have a mean reversion dot. And RSI, I've seen more extended RSI on the weekly, like this section here before this big correction after earnings. That was really extended weekly RSI. But let's see if the daily can tell us anything more. So we are in blue sky territory. The daily is already correcting. We're back into the center band. You're into this first volume cluster, which makes sense that that should provide a bit of support. I have to say, though, because you just broke into the center cloud and because you do have a daily lower high now, so you had this higher high. I'm tired and my tools aren't working. Higher high. Higher low, lower high, lower low. So you just flipped structure. You might get a little bit of a bounce here, and that could form your right shoulder. This might not be your right shoulder right now. You could get a bounce and just, come back up, and you could reject from the Confluence Model Center Band and come back down to break down. Something to watch out for. But there's definitely a bit of risk in this right now. The daily trend on the optimized trend hasn't quite flipped, but looks like it might just be flipping orange. So that's another thing to look out for there. And if you are looking to the daily, this could correct for several more days. Maybe it heads down to the 200-day moving average or this big volume cluster here at 196 and find support in that region. So I don't know what your entry price is, but that's something to be aware of, that you've got really this 196, 197 level with this pivot low, this VRVP volume cluster as a support to look out for on the underside. And then below that would be the 200-day moving average. And I would say somewhere in this range around 191. So depending on where you got in, you have to, make that decision if you want to stay in it and see if you can get a bounce from those areas, or if you want to lock in profits now. And if we go to the 4-hour, even though you have a mean reversion dot, you hit the bottom of the band, the 4 hours seems to be confirming this idea of a bit more correction because it's our first swing in the lower band. So even if we have a little bounce up, this normally takes 2 to 3 swings. So you have to be ready for that. So again, depending on your entry level, you have to make that decision. But I think you will see more downside. I wouldn't quite count this as a head and shoulders pattern yet. It's a little ugly. If you do see a bigger bounce here and we form a right shoulder that breaks down, maybe you could count it then. But this right shoulder right now being so small, not touching the neckline, you can chart off of it, but it's not the prettiest and I wouldn't trust it. Okay, CHWY is saying the only charts that matter to him are Bitcoin and MicroStrategy. Well, we already covered Bitcoin, so we'll look at MicroStrategy, which continues in its downtrend. There's maybe some slight support that you could imagine coming in at around $200 from this little pivot high way back in April of 24. But really the main support would be getting back into this cluster at around 180 to 183 to see if you can find a bounce there. We can look at the Confluence Model Cloud and the RSI to see if that'll give us any lead. But especially if there's weakness in Bitcoin, this is going to keep breaking down. Now, the one good thing you can say about MicroStrategy is that the downtrend, you had one pace of the downtrend, now it's accelerating. So, from that perspective, it's probably closer to the end of the correction than it is to the beginning. And I'm just going to bring up my 4-hour chart because the 4-hour chart actually marries up with all these trend lines. You were probably wondering why I was so bad at drawing trend lines on the daily, but I like seeing the extended hours price action. So we probably are getting closer to the end, but if we don't bounce at that 180-ish level, then we could just get back into this range and perhaps we find some support at the middle of this range. 153 would be the next zone I would be looking out to, and then the bottom of the range around 115. So if Bitcoin breaks down, I fully expect that we will, maybe not in a straight line, but make our way down here eventually. Otherwise, we would probably bounce at one of these incoming levels here if Bitcoin recovers. And then you're really looking to this trend line that we held for a couple of years, this diagonal trend line, and thinking, gosh, is that going to play resistance? If for some reason we can get above that, the major hurdle for MicroStrategy is now going to be this horizontal level that we failed, that was support for months at that $360 and then rejected us 1, 2, 3 times before really accelerating in this downtrend. So, and I guess the 200-day moving average if and when we intersect that again as well. But unfortunately, not a pretty chart for MicroStrategy. Now, one thing to think about, because Dan in the community, I think it was Dan, he bought some puts on MicroStrategy today. And since we are getting close to bounce points, one thing you might want to consider is looking at one of the ETF products that rebalance every day, because they are bleeding out a little bit more. So something like MSTX, even though it's 2 times leveraged, over time it is just underperforming MicroStrategy itself. So even if you hit a bounce, this is going to underperform over time. So it gives you a little bit more assurance in terms of your puts playing out because of that rebalancing every day. So it is something just to consider on the short side of the equation if you are playing an asset like MicroStrategy. And really, this can apply to Tesla. This can apply, to, I don't think HIMS actually has a short on it. I just has HIMZ long, but anything that has a short on it, like I know OKLO has some short ETFs on it too. The one thing is there's not as much open interest and options volume on these ETFs, so you really want to be careful with picking the right strike price. Okay, I'm going to try to be a little quicker because we have quite the list. So BPK369 wanted SABR and AQMS, so let's start with SABR. I don't believe I have charted any of these before. And I really like to start on the weekly with a lot of these, just to get a feel for where they are. No, I must have charted this at one point because I drew a squiggle on it. Or is that the 200-day? No, that's the 200-day. Ha. All right, let's turn that off and see where we are. This thing has really been beat up. I don't know what's going on with this or what SABR is about. We're obviously way below the IPO price. If you have a lead on this, maybe the only thing I could say that's positive for a trade is that we are kind of forming a bit of a double bottom here. It's holding that 178 and you would have a clear invalidation to get out from, but it looks like it might break down more. If we do bring up RSI and mean reversion, it's been very down to the downside for quite some time. And if we look on the daily, you can just see that double bottom a bit better. So yeah, it looks like a fairly risky chart. But at least you have that invalidation point. If it breaks below 170 or $1.70, then, that's your point to get out. And he did break that downtrend. Let's see where we are just in the confluence model clouds. All right. On the daily, yeah, perpetual downtrend, maybe trying to find support from the confluence model center cloud there on the daily. But if you know something, great, but it's not the prettiest chart. Okay, AQMS. Let's see if this is looking any better. Oh, yes, I know AQMS. And
they had a big pop on some news of some rare earths being found in one of their mines. Now, obviously, that was a major correction. It shot from, $6 up to $40 and has come back down to earth. Now, the one thing I will say from this, even though that was an extreme move, it clearly has a base that's been forming for a long time at $3.30. And if we just were to count this out as a bit of an anomaly or hype, we broadly are still making higher lows this whole way through. So it seems the last couple of weeks, it's just been consolidating. And if you did want to take a try on this, this is one where you could say, okay, we've formed a clear base here at $6.39. Maybe you put your stop just below $6, or, I mean, really, if you want to go, 607 or 613, that would already be breaking this range. So you could put a stop below there and just see if you can get a bounce play. If we look at the 4 hour, just to look at the structure on a smaller time frame, there's a real subtle sign of strength in the structure. So if you're looking at where we found a base here at 641, and then we jumped up and we made a higher high right here, and then we came down, made a higher low, higher high, higher low. So it's consolidating, but it's just showing you subtle signs of strength. So it could be a good trade because you have that even level where you can set a stop just below, and that's the key thing, having that clear invalidation. Okay, Teslaholic, I love the username, by the way, was asking about Meta, which I'm curious about too, because I have a small position that I started in this after this big drop, and Tesla's really had two bear markets this year. I mean, they had a 23 or something percent correction earlier this year, and now we're at like 21%. Let's see, how was that one? 35. Okay, I was more than 35. I didn't even get down to the bottom. But now I think we're at the 20% level, not from here, but let's measure it from the highs where we are right now, 24%. And if we get down to 580, that would be 27%. So a couple bear markets in 1 year, pretty remarkable for Meta. But if we're looking at the small time frames, we do have a little bit of a bullish divergence on the 4 hour chart, and we're finding support at that even $600 level. So we bounced from there last week on Friday, and we almost got down there today. But I think the daily is the better time frame to look at, and we can do a couple things. We're clearly oversold. We have mean reversion dots to the downside. But I want to talk about how I got to that 580 level. So first, let's draw up some Fib values. And if we draw our Fibonacci values here, actually we should go back to the 4 hour, because there's price action that we see on the 4 hour that we don't get on the daily. And if we bring this down, you can see we wicked down just a little bit below in after hours on the 7th of April there. So that helps us get a little more accurate read. And the 50% level here was at 635. We unfortunately dropped below that, rejected from the underside once. And we have here at 596, the 382 level, which is getting close to this price target here. And the price target is coming from a head and shoulders pattern. Now, there's a double top here that we measured out where we already hit the price target, which was sitting right around the 50%. But if we draw a line across here for our head and shoulders pattern, and we go up to the peak to the neckline, and we just drop that into where we broke down right here, that's what gets us to this target. And maybe, I have my alert. I always set my alerts just a little bit above those. So it gets us to 585 for that target. And if we're looking at things on the 4 hour, you could imagine that even if we see a little relief bounce, that we could take one more swing down in this band before attempting a recovery back into the center band. So Meta is definitely weaker than some of the other tech stocks, but it's most likely closer to the bottom of this correction than it is, to dropping meaningfully more. Okay, Danimal from North Carolina has a lot of requests. We covered Bitcoin and Sol already, so I'm going to go through these quickly, but I'll probably spend the most time on the first one, which is Tesla. So on the 4 hour, we hit the head and shoulders price target, which was at 406, and we exceeded that a little bit. you have to imagine from the 4-hour that we're going to see a near-term bounce. And I almost got back into a long position today, also because we had a gap close. We had a daily gap here at 396 that we closed now. But the thing that's giving me a bit of pause on Tesla is the daily time frame. We broke down on the daily RSI. This is where I got out of my long calls last week, and we rejected from that. We're still heading down. Now on the daily, the optimized trend has flipped orange as well. You can probably just see that right behind there. And we're back into the Confluence Model Center cloud, and we still have a ways to go for RSI and mean reversion to reset at least a few more days. Now, I have seen things bounce before, but just where this is sitting in the cloud, even if we bounce and we extend this cloud up, we could bounce tomorrow or on Monday all the way up to almost $440 and still reject from that cloud and could continue in a downtrend. So it's something to definitely be aware of now that we've broken into this zone. And given the broader state of the market, and I'm going to remove this price target line now, that's what's giving me pause. If we didn't have broader market weakness, I would say 4-hour is showing a bounce. I'm going to get into, some January 2026 calls. But right now, with what I'm seeing on the daily and the broader market weakness, I'm just taking it a bit slower. Okay, next request from Dan is HIMS, which is almost to our price target. So after we broke down from the trading range we've been in, and I'm looking at this on the weekly, we are almost to that $35 price target. The only thing that's given me pause on the weekly time frame is that during this entire uptrend, we have held this RSI level here at 44, and we are just breaking down from that. Now, if we have a strong bounce, because this is just this weekly candle that's breaking down, if we have a strong reaction tomorrow and bounce away, this could be saved. So that's something to watch out for. And what could save it is that we have this trend line that we are now testing again, which is our major, I would say, support in this bull run since since September 2024, after the yen carry trade low, which was a major reset event. You could say that was a little mini bear market in and of itself. But on the weekly, we broke back also to the Confluence Model Center cloud. So that was right when we lost the 200-day moving average. Something to note there. So this has some more work to do, and really on the weekly could bounce all the way back up to $48 and still reject off the 200-day moving average and the weekly Confluence Model Center band. And this is also, by next week, will probably flip orange on the weekly, which is not a great sign. It hasn't done that since that yen carry trade low period. So let's go into the daily on HIMS, and you can see on the daily, we almost tagged that trend line and the $35 price target, both coming in at the same point. We are now in the Confluence Model lower band. Sometimes these can recover just after one bounce, but with the broader market weakness, I'm not quite sure. And geez, we are right on that trend line on the 4-hour chart. So this is the after hours price action right now. And we are oversold on the 4-hour. We have been for quite some time. So you'd want to see a bounce soon here. And if this can't follow through with a bounce tomorrow, then, look out below. And I think maybe even as low as $23, we'll go back out to the weekly for those lower price targets. But if this bounces, resistance overhead is at 41. And it's a good trade entry because you're into this trend line, things are oversold. And if you break below, you know where to get out of it. And just in terms of horizontal levels, that 41 overhead, that's your major resistance if you bounce, because it was support for all these months. And down below, the reason I was saying that 23 level, you could maybe scoot this up a little bit. Let's be generous and say 24. But that is pretty much the point of these previous highs in July of 24. Then you found support on that in December of 24 and January. And we bounced from that again in April of 25. So that would be the next major level down below. And where we are bouncing right now, we did find some highs there in December of 24. And these high weekly candle closes came in around the same point at 35. So this 35 level is important. Okay, Dan, I am not doing a good job of keeping these charts short, but in terms of NVIDIA, we did just bounce today from our previous breakout zone. So we deviated from this a bit, but the 185 level was a key level of resistance that we broke above once, got back underneath for resistance, broke above again, and then on the, was that the 10th? No, that was November 7th, actually. We dipped back below it. So I thought this was the 10th, but that must have been something with the Sam Altman news or what have you. So bouncing from that again is a good sign. If we don't bounce from this, the next level of support is really the most traded zone here at 182. We can just say 180 for round numbers. And the Confluence Model Center Cloud on the 4 hours right there. We have this clear downtrend. So breaking this downtrend would be your first sign of recovery here on NVIDIA. And, we're bottom. Let's look at the daily. The daily, we're flirting around with breaking back into the center band. So take a look here. Even if this cools off, NVIDIA has been so strong. Let's say we get more of a market pullback over the next few weeks. I really have to imagine that this 164 zone would play support, maybe even before that, where the Confluence Model Center band is coming in, and I could see it chopping around a bit before eventually recovering. So, I would say not the most downside is probable for NVIDIA, but there are some news out there just in terms of data center building slowing down because of folks not being able to acquire electricity. So there are some narrative headwinds potentially, even though, the sales numbers are still solid. Okay, and last one for Dan is REMX, which has cooled off a little bit, but we got to go to the daily for this one because this one has run quite a bit. And actually, I haven't looked at this in a while, but it bounced from our key levels. So the key support levels for REMX are here at $63, which corresponds to this downtrend. Pivot high rejection here, that was back in December of 23. Now our next zone is really right here at $55. So I would have loved an entry at 55. The one thing I will say on the daily, we did come up and we've taken a few swings in the upper band now. So in terms of this narrative, we have our swing 1, swing 2, swing 3, break back in. Now we're potentially finding a bit of resistance here. Could this drop back down and get us down there and then really reset the daily RSI? Perhaps. That would be a nice entry to get, but it requires a bit of patience. I would say if you didn't nail the 63 for a trade and this potential resistance here right now and the optimized trend flipping for a moment, it feels a little bit riskier now than it did at 63, just because you don't have as much buffer or clear area to set your stop to. So hope that's helpful. 63 below and 55. 55 would be an entry that I would be really happy with. Okay, next on the list for Silent Stacker, we have Palantir, which obviously has been an aggressive uptrend since May of 23. And this overhead resistance, we were able to break through it, deviate back underneath. And now we're just barely trying to hold that support, which actually aligns with something else here. I just want to go to the daily. So if we're looking at this trend line, we're, flirting with breaking down from it. But we also have this horizontal level right here, which has played a lot of support for us in the past. That is coming in right at 168, 169. So that's an area to watch because on the daily chart, we made a lower high. And if we break below that, we would be making a lower low. And then our next support really wouldn't be coming in until the Confluence Model Center Cloud. And below that, the 200-day moving average. So you'd have to look out for that. And then you have, this next trading cluster, which would come right in line with the Confluence Model Center Cloud, which would be at 155. So yeah, watch out. If you break 169, then 155 would be the next support. And I'm just, looking to the downside right now because the broader market is weak. But if we do break to the upside, breaking this pivot at 195 would set you up for potentially making higher highs. The optimized trend on the daily is about to flip. You're about to lose this trend line. So paying attention to this horizontal line at 169 is all important for Palantir. Okay, next one for Silent Stacker is SOFI, which actually is a pretty damn strong chart. Excuse my French. So we did have one extension price target from, I think this was a long-term cup and handle, if memory serves. Yes, it was. So we had a longer term cup and handle right here, and this price extension got us to right about where we landed right now. So the weekly chart's overheated, the daily is very overheated. We hit that price target. This, to me, say on something like the monthly, looks like an amazing chart that has broken into fresh all-time highs and can do a lot more. But on the monthly, we're also overheated, so we just have to be honest with that and with what the broader market is doing. If you are in it, it might be some time to take profits. And if we look to the daily, we've been in a massive bearish divergence. It is selling off a little bit today. I mean, I know earnings were great. I think, 32% beat. I didn't check out the earnings call. But if we are breaking back into the center cloud here on the daily, there's just a chance with what the broader market is doing that it could cool off a little bit. If we did get back to this breakout zone, which would be coming in at about $20, depending on when we intersect it, because it's uptrending a little bit, that could be a good reentry. But, that's losing almost a third of your value by the time you get down there. Now, things can stay overheated and can run longer than you would expect. But because we hit this cup and handle price target, and because everything from the weekly to the monthly is overextended, I would suggest caution. The other thing we could do, just to see if there are any other overhead price targets, we could run a fib-based extension based off this last move. And sorry, I have my GAN fib levels here, which are a bit convoluted, and there are too many of them. So let's just go to my default fib extensions to keep it to something a bit more normal. So the other thing that's right here is the 1618. So we know the 100% extension is the most common target where we consolidated for a bit, then the 1618. If this does extend and go into some kind of crazy run, then the 2618 at 41 would be the next target. But a lot of these signs are suggesting that this should cool off for a bit, and maybe you can get another good entry on it. And SOFI, I will say, is one that if it does correct, I'll be keeping my eyes on it. Because I do think, just based on the monthly and breaking these previous highs, it could have more room to run. And this would be further in the future. Okay, next one for Silent Stacker is CHWY. Not Dr. CHWY on Discord. CHWY, which I believe is the online pet retailer, perhaps? Maybe? I think so. I think we've ordered stuff for our dogs from there. All right, let's look at it on the weekly. So, nice bear market bottom here in March of 24. Interesting that this one bottomed a fair bit later than the rest of the market. I mean, it's clearly, in an uptrend. You didn't break these previous highs yet. Okay, so this is going to be, see all these even highs here? This is why it's good to start on the weekly. See that 52 is going to be a key resistance for CHWY. And so we'll mark that out. If we are looking at the uptrend, we had a clear stair-step uptrend, and now we are in a downtrend. The question is, where is this going to find support? The weekly has a bit of room to correct, and let me just silence my phone here so we don't keep getting disturbed by that vibrating. But let's look at the daily. The daily is giving you already some entry signals, so that's interesting. You are below the 200-day moving average, so little bit of weakness there, and you're in the confluence model lower band. Even though you've printed these, I think you're getting close. But I would watch this center cloud for resistance, which is coming in at 34, and then maybe you take another swing down and then you can recover. But you're getting real close, and it would be really nice to maintain above this pivot low here at 30, because you have one low here with that, an even low, and it corresponds to these previous highs. So 30 seems like a very, very important zone for CHWY right there. And you can just see how price action finds resistance, a little breakthrough, but then finds support on it again. So if this is going to continue in a broader uptrend, you would want to see that bounce there. And that could align really nicely with that, say, rejection off the confluence model center cloud. Now, another move down. And really, if we're looking at the narrative of what's happening with broader markets, everything's weak right now. We could anticipate some more selling down to that level. And they have earnings coming in around a time where a bounce would make sense. So it's not, always great to buy into earnings, but we have a lot of technicals and levels stacking up in our favor. So maybe that's something you want to take a look at. Okay, and last one here for Silent Stacker is TGT, another one that I have never... Oh, Target. You love your retail, don't you? Now, I will say it's been a tough time for retail, especially with the American consumer. Confidence being low and all of that. We're clearly below the 200-day moving average. We're clearly in a downtrend for Target. It's trying to make a little base, but we are still making lower lows and lower highs. So we got to look back in time. Oh, and I see why we're trying to bounce right here. This is actually an important zone for Target, which is why, when we look at these assets for the first time, we pull in the weekly and see all these previous highs right here. This is right where we're finding support right now. So previous highs turns into support. Now it's support for us again. You could argue that there's a bit of a range here. You could go to all these highs back in 2020, and you could draw another line. Yep, that's where our second low came in. Okay, so it makes a lot of sense. So this is your support range, $84 or $85 up to 90, 85 to 90. And if you can bounce off of that, you can get in the Confluence Model Center band. Maybe you're on your way to recovery, but this one is pretty beat up. You have a little bit of a bullish divergence here on the weekly, so that's good. Higher highs on the RSI, lower highs in the price. That means you're getting closer to the end of the move. The daily is trying to recover. You're back in the Confluence Model Center cloud. So it could just do it. It could maybe turn around. If you entered here, I would put a stop right below 88, this previous swing low, because you're probably going down to 85 or lower if this doesn't bounce here. But for how beat up this is, you at least have a clear entry point and a clear invalidation. So, not bad in terms of picking this from this standpoint. I just don't know, how long it's going to take for the retail segment to turn around, especially with the confidence of the American consumer right now. But we'll see, if stimulus checks go out and people have a little extra cash in their pocket, maybe I'll be happy to be proven wrong. And, the other thing here, you have this downtrend, which was tested 1, 2, 3, fourth time breakout, deviated a little on the back test. But if you can hold this, that's another thing that could suggest a turn in trend is coming. Okay, next we have 2 requests from Texas, and we're getting close to the end of the list. We have Google, which I think dropped like $15 today, if memory serves. All right, so Google, we do have higher price targets for it. I'm assuming it's going to make its way up to 350, but it might not make it up there in one swing. Now, we are consolidating in a very clean flag pattern with resistance overhead at 290 or 292 and support just underneath at 275. So very defined. And I think with Google, when you're in a range like this, and Google is overheated. I think it's got a lot going for it and it can move higher, but it doesn't have as much room to run on the daily chart or the weekly chart as Amazon does. I mean, look at where this is on the weekly. So I'm wondering if with the broader market weakness, if this is going to see a bit of a cool off. And all you really need to do right now in terms of simplifying your trading is draw one line overhead. And after hours, you did deviate up to almost 300. So you could put this overhead resistance at 300 or just below 300. And then you have your line below right here, which is sitting at 275, which we didn't get to today. And all it has to be is, I don't know when you got in, but I've been in Google since the spring. It's like, okay, if we break below 275, consider getting out of your position because you're probably coming back down to this range to about 256. So if you want to save that move before a bounce, then get out of the position. Or if it breaks 300 to the upside, you're assuming the uptrend is going to continue all the way up to 350. Okay, and the last one here from Texas, which actually was also requested from Dan, which was silver. Now, silver recovered faster than gold. You could argue that there's a bit of a double top on it right now at 54. So that's the one thing to watch. But really quickly, you're going to know. If you didn't get in on this dip, I would just be a bit patient right now to see if this is going to break or not, because the 4-hour at least is overheated and says it needs to cool off. We're in the Confluence model upper band. So you'd have to imagine that this is going to continue in the uptrend, even if it does pull back a little bit. But let's see if the daily can give us any more info on if the daily has more room to run. And the daily definitely does have more room to run, but you could also argue that you're getting a bit of a hidden bearish divergence here with price at the same levels, RSI at lower levels. And this has been overextended for a bit. So right now, I would just keep my eyes on it. If it does look like we're rejecting from this and you're already in a position, time to get out. I don't think it's time to chase the move right now, even though I think silver and gold, in a few months' time can do better again. Just this even rejection that we got was something to keep your eyes on. And if we break above, then you can chase it for the next move. And we could run a fib extension for that too, just to get you levels to the upside. All right. So if we're looking for targets to the upside, the 382 is just overhead at 55. The 100% extension, which I don't think we would hit anytime soon, but that would be all the way up at 71. And then the 786 is coming in at $66. So that gives you some targets there that you can look at for silver if it does break to the upside. All right, this is a funny one. Rob is saying RR, Rolls-Royce. I guess, the rich are still spending. Nope, not robotics. These robotics are coming up. Let's just type in Rolls-Royce. RR period. Tricky. This one is not available on the New York Stock Exchange. Yep, they are still doing well. Well, people with money are spending money. Okay. Now, where are you going to get in on this? The risk with something like this is super elevated when it's run this far, and it just can't stay elevated forever. I know it looks attractive, if you're not in it, right? You're like, this thing is really run. If you have been holding this since 2023 and you've ridden it up from $133 to over $1,000, almost getting a 10x, congratulations. I did not know Rolls-Royce was performing this well. But now that you're at that psychological $1,000 level, it's just, if you're not already in it, I don't think there's an entry. But we could just go off the low here to this intermediate pivot just to see where we're finding resistance. We're finding some resistance at the 786. Okay, so maybe if this has one more move in it, it could go up to 1300. But this should come back down to earth at some point, especially with how vertical this is going. On the monthly, I bet you're oversold on the monthly. Yeah, look at this on the monthly. You're getting a mean reversion dot. You've never seen RSI this high on the monthly. Mean reversion's at 4 standard deviations. To the upside. So if you're in this, congratulations, lock in some profits. Now is not the time to chase a chart like this. Robzilla, I know you didn't request this, but since we're talking luxury, I want to pull up LVMH because it has had quite the bounce the last couple of months and was oversold on the monthly. We got a mean reversion dot. And if we just work our way down on the weekly, has gotten back above the 200-day moving average and now is into resistance. And actually, this is what I was looking for on this. It's our third time touch point of this downtrend. Now I'm going to be scouting a pullback to right about $523 and then seeing if we can get a fourth time breakout on this. So yeah, if you missed the boat on MC or LVMH, if you're in Europe, it's one to watch just for a bit of resistance right now and to see if it can give you that better entry before a fourth time breakout, which, if folks are getting their stimulus checks again, then maybe this is something that could have more legs in it. All right, this is turning into a bit of a marathon, but we're on to the last three. So, or last three people who requested things. So Wildman Free, 2 assets or stocks that Marty spoke about on DCA Live on Monday. LTBR, I think it's at Lightbridge. LTBR, yeah, Lightbridge Corporation. Okay, so they've had a big move up and are correcting. I mean, they're still a long way off their highs. But if we had to connect some dots here, I'm just seeing if there are any potential trend lines. We have these highs all back through here at $17, which align with some of these highs, which seems to be about where we're bouncing right now. So you could say there's some support around there. And if we look at another level, I would say this would be our other zone down below at about $13. So if we're just looking at these on the weekly or even the monthly got overbought on the RSI. I imagine this is going to cool off a little bit. It looks like, things are squeezing and are about to start to turn. But from where this came from, oh my goodness, charts aren't going to go up in a straight line. I think it probably needs to cool off just a little bit. So if we get into the daily to try to get a little bit more nuanced with this, we are in the center band. I could definitely see us going down to this $14 range. It's where our point of control is on the VRVP. It's probably right where we're going to intersect the 200-day moving average. And since you broke this uptrend, the the optimized trend's about to flip, and you made a daily lower high here, and you're breaking the lows on the RSI. Haven't gotten a mean reversion dot yet. I think you're heading into this zone at 1470. And then the other one he mentioned, just looking at my notes, IDR. All right, IDR is getting a little bounce on, but again, the trend model flipped, and don't be convinced by these bounces. You're now in the center cloud. This is just probably going to reject and continue the downtrend. You do have, I suppose, on the daily here, you have a mean reversion dot, but you can still bottom out here. So even if this does maybe just ride this for a little bit, it could reject more. If it got above the confluence model center band, maybe that's a bit more convincing, but I've seen too many of these where even if it does that, it just spikes up and then comes sharply back down. So I'd be careful. I'd give this one a bit more time to, give me a convincing base or chop around in here and tighten up before the next move higher. Normally after a blow off top like this, you just need to give the asset time to settle out and build some structure. Okay, Wealthy Kata also wanted Meta. We already covered that. Last requests are from Tommy Twista, NVIS. And I just realized that the recording software is having issues with my volume, so I'm going to try to boost this up in the edit, but no guarantees. Okay, in terms of where we are right now, we bounced right about these previous highs. We have this big gap fill. Even though I think this one's going to do well eventually, we're clearly seeing a downturn. I would imagine that we'll at least get to this volume cluster at 69 or the gap fill at 63. We have another gap fill down here at 56. And this really, to me, we have the 200-day moving average. Seems like the area where we're going to find the most support just because of all these previous highs in this breakout zone. So that would be the area to watch for me. Let's just say $56 to $60. And then we'll have to see what the 200-day moving average is doing at that point. Okay, next one is STX, which I don't believe I've charted before. This one, it's bouncing off this previous peak. I don't have an edge on this one. It's run too far, and it's just gone vertical. Look at the weekly. Let's look at the monthly. Yeah, it's time to take profits if you're in this one, but it's not time to get into a trade on STX. Okay, and last one for Tommy Twista is Deckers. And Deckers, did get beat up on earnings, drop below this support that we've had for the majority of the year at 93, got to the next zone at 80, which if we go back in time, just corresponds to the bottoms of this previous trading range. So good to see that we found support there. And with the broader market selling off, it's actually been recovering a little bit and is back into the confluence model center cloud. Now, on the 4-hour, we did get one mean reversion dot, which I don't love to see after a small move. But we have more room to go on the RSI. And if we look to the daily also, is just starting to recover. and we closed a little bit of a gap. Let me get rid of my buy signals here. We had a little bit of a gap up, so that just closed. So perhaps that's setting us up for a bit more of a recovery. If we bounce up and we find some resistance here at 92, with buying calls here at about 95, and then adding to my position, that would have me slightly in profit. And at that point, because we might reject from that zone, I would roll out to give myself a lot more time, or maybe just close the options position and see what the reaction is like there, because there is a chance that we could take another swing down. But really between 75 and 80 is very strong support for Deckers. So that is it. We made it through the charts, you guys. Huzzah.
Okay, so that is it for the charts. Everything I did today in terms of drawing out support and resistance, looking at previous trading ranges, the VRVP, to identify those levels, drawing trend lines, that is something that I hope you can all pick up from watching these videos and apply to your own charts for the trading that you are doing at home to sharpen your game. And beyond that, for the markets, tomorrow I really just want to see buyers step back in, some kind of buying momentum to help close out the week, to give us some confidence that perhaps this could be a local low. But really, the burden is on the bulls, on the buyers, to prove something, because it has been a market that has been in a mode of the bears, really overpowering things and selling every bounce for the last several weeks. So the burden is going to be on the bulls. We want to see that proved. And if we don't get that tomorrow, we probably will still get a relief bounce at some point. But then I'm really going to be in a mode of treating that relief bounce as an opportunity to exit. And that would make me more concerned for a more extreme drawdown. So, I'm sorry it's not all cheer today, but I always want to shoot straight with you guys and give you both sides of the market so you can make an informed decision. It's not my job to sit here and just be perpetually bullish. That's going to get you in trouble and have you stacking losses. I want you to be clear-eyed, looking at both sides of the market, having a plan for either side of the market, and always managing risk with tight stop losses and invalidation levels. That is the goal. Anyway, I hope you guys have a good evening. I'll see you guys tomorrow for the weekly wrap-up. Bye for now.